you're a beginner Forex trader and you're like, I would like to trade Forex, but I have no clue where to start. Well, then this video is for you. I will not do what most other people are doing on these kind of videos, which is start to introduce you to Forex. What is Forex? How does it work? What are pips? What are brokers? What is leverage and all this kind of stuff? You can watch other videos for that. Some of those concepts are useful. Some of those concepts are not as important. What I will focus on is what I believe is going to make the biggest difference in your trading journey, which is to actually focus on charts. Because unless you are a fundamental trader, meaning you are doing fundamental analysis, looking at economies and how those economies are performing towards each other, you are not. What's going to drive your trades and what's driving my trades is just simply looking at a chart. I don't trade news, I only look at charts, and that is what informs my trade. So what's the best way to get started with trading then? To start looking at charts. It is really that simple. You don't need to overcomplicate it. And I will show you exactly how you can do it and what you can do. But before we go there are two things that you can do. One is you can do still chart analysis. Still chart analysis is basically looking at a chart after it has been fully formed. And you are looking at where would be ideal times to buy and sell, and you start to look at those and see how you could have managed a trade if it went against you, or where would have been a good entry. How could you have spotted that good entry? What were early signs that this was a good entry? That is a discovery. You know, no one can really do that for you. You need to ask the questions yourself. You need to study the charts. It takes time. It takes energy. Okay. And the other thing you can do is use what I call backtesting, which is basically looking back at previous data, but instead of looking at still chart, you're looking at the replay mode of TradingView. TradingView is a charting service. You can just go to tradingview.com. And in there, you can sign up for a free account. There are limitations to the free account. I believe if you're on the 1 hour chart, you won't be able to scroll back as far. If you're on a daily chart, you shouldn't have much of an issue. Up here, those are the time frames that you have. You can choose time frames from the little arrow here. Those are that is a really important thing for you to know. The other thing that's important to know is this replay. I am already in replay mode. I've prepared this because I don't have a mouse and I don't want to bore you scrolling back. Usually when I do that, I close my eyes or I scroll this up so I don't see the chart because I don't want to trick myself. I want to see the data with fresh eyes rather than having already had ideas of what's come. Then you can select a bar and you can just click and it will put it here. You will see the previous price action, but you won't see the future price action. You will see that by clicking the play button here. You can choose the speed, the replay speed, which is 10x, 3x, 1x, or slower. I don't recommend using 10x at the beginning, but you can, just so you have a little bit more of a feel. Then here you have the position size. Again, you can input whatever quantity you want to input. There is myforex.com, and maybe I'll create a video around that, around how to decide position sizing. At the moment, I am only wanting for you to do one thing, which is watch the chart. And the one way to get yourself to do that is just randomly enter a buy and sell position with a 1-to-1 risk to reward ratio. What does risk to reward ratio mean? Basically, when I'm going here and I'm opening a long position, I click the long position, and I'm saying I'm going to go long here. The risk to reward means that these two things are the same. So it is the same amount that you would make when the same amount that you would lose. As you can see, risk reward is 1. This is the pip amount that it shows you, and there's percentage whatever. So that is 1-to-1 risk reward ratio. Why do I want you to use a 1-to-1 risk reward ratio? Very simple. When you are entering randomly on a chart with a 1-to-1 risk reward ratio, you do 100 trades, and I've actually done this myself. You do 100 trades, you are going to be ending up with about a 50% win rate, which means you are already at break even. Of course, that does not take into account commissions and swaps, things that you need to pay your broker. So you are going to be losing if you are only at break even with the trade, because that's not taken into account with that. But you're still better than most people who are trading, because most people are not even managing to break even. And so this is a really neat system. And I have not come up with this system. This system was introduced to me by Nick Sean. You can check him out on his YouTube channel. It's fantastic. I've learned a lot from him. All right. So you have scrolled back somewhere, you haven't seen the price action, and basically what you're going to do is you're going to say, well, what do I think? Is it going to go up or is it going to go down? You don't even have, very complicated reasoning. You just look at the chart and you just randomly enter. Okay, so you can do that either by using this tool over here and then just watching when it's going to get hit with the long or short position. Here you can choose long position or short position and just put it in. Short position basically means you think it's going down and you're going to make money when it goes down. That's all you really need to know about it. You can look up the mechanics and all of that. So, all right, I'm going to say it's going to go up, it's going to come down, and it's going to go up. Okay, so I'm going to click buy. Once you hit buy, it has used 10,000. The lot size for 10,000 rather than some random number. Nah, forget what I just said. That was really confusing. Anyways, so I want to have a take profit. Take profit goes somewhere. Let's say I go up here. That's going to make me 130 bucks. And if it's going to go below, I'm going to use about the same size. So it's a little bit less than 1-to-1, but we'll just say it's 1-to-1. And then just hit replay. Okay, it's 10x and it's going down against me, and you can just watch it. You how the markets move. Fantastic. So I got stopped out. That is my first loss, and I just hit pause, and then it can say again, want to enter here or not, or do I want to wait? And I say I'm going to wait here and see what's going to happen, and then hit the replay button again and see how the market is moving. All right, so it's going sideways for now. I don't really trade sideways markets, and it is going further down. Okay, here. Yeah, so let's say, okay, it's in a downtrend at the moment. I think it's going to go further down, so I'm going to sell here. I'm going to have my take profit somewhere down here. So I'll make it about the same size before, though you can take also market structure into account so that you're positioning your stop loss and whatnot around the same place. And you're going to hit replay again, and you're going to watch the market. It is not as important what the market is doing, whether you're right or whether you're not. What is more important is that you're watching the market and that you're getting a feel for the market. Okay. And I paused it here because at the beginning, I think it is the best for you to not manage anything. So literally you just enter and exit by letting the market do its thing. You enter by you clicking, but you let the market take you either out or hit your profit target. But as you go along and you start to build your intuition, let's say you've done this, 100 times or however many times, and you're like, you know what, I start to feel like, oh yes, this is kind of, it seems like it's going to pause or going to go against me, and I want to exit. You can start to manage your position manually, which is going to help you to be more than 50%. But the first exercise is to literally just know, if you're entering randomly, if a 1-to-1 risk-reward ratio, you take a big enough sample, you're going to end with a 50% win rate, and you're at break even. That is really good to know. Now, the next step is to manage it. So for me, very clearly now, this it looks simply less likely that this is going to hit my profit target. I would have already exited down here, but I want to show you how this goes. It's pushed back up. It looks like it's going to be in a range, so I am exiting here with a small loss, closing position here. See, very simple. So this is really it. This is all there is to it. And you just go ahead and do that. You can use the long or the short tool to do it. If you want to do it that way, you can use the this one here, down here, and do it that way. You need to be aware, if you're using this, you do want to stick somewhat to the same position sizing. If you are using varying position sizing, you are not going to be at break even potentially, because the loss that you're taking might be bigger on some positions than others if you're using inconsistent sizing. So what you can do as well with the stop, with here, if you take a long and short position tool, is you can just basically keep a track on a piece of paper. That was a win, that was a loss, that was a win, that was a loss, and you will see at the end that there's about a 50% win rate, and you're around break even. Now you include your intuition, you include you starting to manage the trade, and you do this on here, you will start to be a little bit better. You can start to have a little bit higher win rate than other times, and your losses will be a little bit smaller than when you were going with just letting the market do it, because you're not going to wait till it hits all the way to your stop loss. You're going to exit beforehand, and in that case, it does make sense. It gets a little complicated if you only use the stop loss, this tool, the position tool here, long and short. It is better when you use this one here, because then you actually have a more accurate account on how much it went towards your stop loss and how much that is in terms of monetary, in terms of money. Will this make you profitable? No, it is a first step. After you've done this and you've done sufficiently of just watching the chart and getting a feel for the chart, what you need to do is you need to go to a broker, you need to open an account, and you want to open a demo account. You do not want to open a live account right to start. Some people disagree with that. They think it's not good to do that because you can be a hero in demo and then all screw it up in a live account. I totally disagree with that approach. Why? Because you want to have a demo account because you're doing something that's called a skill. It is a skill that has many subsets, okay? One skill is to be able to look at the chart, recognize your setups, being able to execute on your setups, get in and out of the trade, manage the trade. That is one thing. There's another sub-skill that comes in it, which comes up, especially when you have real money on the table. That's usually your emotion, your psychology. But if you have taken care of your setups, you know, I'm solid with my setups. I can recognize my setups. I can manage them in the market on a demo account. Then you can start looking at your psychology, and you can learn about your psychology and how to manage it and how to manage the whole thing together. So first, backtesting, demo account, that can pretty much happen simultaneously if you want to. And then you go and start a live account, and you start small with a small position size, because you're less likely to run into trouble this way with your psychology. And then you start to push it up. You start to increase your size. And that is where your psychology might start to come up. When you start to increase your size and you're like, well, that's a bit too much. I start to get freaked out. I start to make stupid decisions. Then scale it back just a little bit below the comfort level of what you want to, what you want to trade. And that way you are going to slowly build the skill, and you start to build good habits. You start to go, you open your account, you put your 50,000 or 200,000 or whatever your trading capital is in there, you trade massive size, you start to freak out, you start to close positions early, you start to build bad habits. That's going to be something that you have to correct. It's not good. It's not a smart way of building a skill. Break the skill down in manageable parts and train that part. Once you know you're solid with that part, move on to another piece of that skill. And you can do exactly that here. This is what's going to make you money, is to read the charts, be able to execute on your trades, have a feel for how charts are moving and how pairs are moving. That is what's important. What is less important are the pips and the leverage and all of that. They still have their place. But you don't need to know the in and outs of the currency market and everything, unless you are trading differently than I am, which is not just price action based, which is what I'm trading. So anyways, I hope this makes your start as a trader easier, and yet you have an easier time to find your footing, because just look at the chart. And once you know the chart, then you can start executing more beautifully. If you're interested how I'm trading, then check out the description. There is a link to my Telegram channel. You can join. I'm calling out my trades there. It's something, by the way, I do recommend, is to go and watch profitable traders. I wouldn't consider myself fully profitable. I've been profitable in demo. I'm currently around break even on my live account. Probably soon in profit, but it takes time to really establish whether you're profitable or not. You can look at someone like Tom Hugard, who has years of experience. He's trading live. Check out his Telegram channel. It's for free. He trades there almost every day. He trades the 5-minute chart. You can look at Nick Sean, as I've already recommended. He trades. He has his own Discord group. And he's a swing trader, so he's a bit different than Tom Hugard, but both of them are very valuable. Hit the subscribe button and a like button if this has been useful and you want to be updated when I release new videos. And I wish you a beautiful day. Take care.